joined from our Melbourne studio by Dow Gillham. He's the Chief Analyst at Wealth Within.
Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale. Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Questions, and we give you the answers about investing and trading. Now tonight we'll share with you how you can put yourself in a position so you will never have to worry about the stock market crashing. We'll also give you our thoughts on international markets, stocks, and look at current trading opportunities. Hello, I'm Dale Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educator. Now, last week, I believe you had a lot of fun doing this show with Janine. She's told me a lot about what happened last week. And in fact, more people have watched that show than any of our other live shows we've done. So tonight, Janine is having a break. I mean, I had one last week, so it's only fair that she has one this week. And so the pressure's actually on me to do better than Janine. So it's nice to be back. As last week I took a well-earned sort of rest, and I visited a friend, a trader, one of the early students that I had, back in 2003 they became a student of ours. Now they become a long-term friend of mine, and they actually have an Airbnb in Rutherglen. So if you're not sure of Rutherglen, it's in the wine country up in the Highlands or in Victoria, right on the Murray River, and it's a beautiful place to go if you've never been. So I was cycling on my bicycle, yes I'm a cyclist, and visiting wineries, so I'm quite refreshed. As I said, tonight my goal is to go one better than Janine did last week, and so in doing so, share with you how you can become more profitable in today's market. Now, I do need your help, so get on Facebook, Twitter, Instagram, Pinterest, you name it. Tell all of your friends to get on the show now, and let's see if we can have more people online than Janine did last week. That's the challenge I have. Remember that it's more the people watching we know are guys. So guys, get behind me and support the guys. I don't want to be sexist, but get behind me and see if we can make this a better show. Now, remember the chat box is off to the right of the screen, so get active, get typing your questions, and I'll get to as many as I can tonight. I'll try and do that as well. But let's get this show going. Now, I did get Janine to record her thoughts on international markets. She did that a little earlier today before she left. And so I'm going to take you a quick break while you watch Janine taking you through some of the charts on the world markets. Now, she's talking about the European markets tonight, and I'll get her to talk about the Asian markets next week. So if we can bring up the video, and I'll be back in a minute.
Hello everyone, this is Janine. I'm here to talk to you tonight about the international markets, and thank you Dale for that introduction. I just want to say firstly, before I get into this, thanks very much for those people who text their friends and families and told them to get on the live show last week. It was exciting to see so many of you and lots of great questions coming through, and I'm sure it's going to be another great show like that tonight. So as you can see now on the screen, I've got the Dow Jones there. Now, the Dow has had a stellar move over recent years, but if you look over the last year or so, and starting from January 2018, it really hasn't advanced well beyond there. So you could call this really a sideways move. Now, Dow talked about this recently in one of his market reports, with the Dow making this strange looking pattern. You can see the tops are getting higher, but the bottoms were getting lower. And this means we've got an expanding pattern. Now, we don't want to go into too much about tops and bottoms and make jokes about that tonight, because I'm not there to sort of see Dale's face when I make them. So that's the fun part about it. Anyway, more serious matters at hand on the Dow Jones. And what Dale did is he looked back at what occurred back in the late 90s, and you can see there a similar sort of pattern unfolded back then. And what happened after that? Well, the market went into a decline, quite a lengthy one actually, into a low in 2002. So the question right now is, are we seeing a setup for that same sort of pattern formation to form, and will we see this market move into lows in the early 2020s, 2021 to 2023? But right now, all you can do at the moment is say, does the market still look like it's going up? Does it still look bullish? And as at today, you can see the market there quite strong, as in last night, looking strong for the month. So that's for the month of April. Now, obviously, getting into May, it may be a different story. Looking at the top line of this pattern, we could see it come up and hit that top line of the pattern. I think that's what Dale was talking about in his report, and I agree with you there, Dale. And looking at the move up there, I've got some levels on here that I'm expecting for the Dow. These have been moves that I've been watching to occur for some time, and expecting that the market would eventually move into that range, somewhere between just a bit below 28,000 and 30,000 points. So that's the US market, the Dow. In the short term, it'll be interesting to see whether it cracks that blue line and breaks through to get into that zone. So if it actually stops and pulls back hard, we'd be looking for something around 25,000. If it falls back below that 25,000 points, then we know that the market's more likely to move into a bit of a decline. Looking at the weekly chart, the important thing here is obviously to start at the monthly, as we do with the stocks, but then have a look at the weekly chart and see what's unfolding. Now, as the stock moves up, you'll notice how it looks really quite stretched in making that move from the low. It's stretched quite high. It formed a little gap there on the weekly chart, which it attempted to come back and fill. And what's really important about markets is that history repeats, as we've explained, and we talk about this in our courses, and Dale talks about it in the book. So if you go back and have a look what a stock or market has done in history, that gives you a really good indication as to what can occur in future. So we've got a few levels there for the Dow. Further ahead, if it pushes through this zone here, then there's a potential for 33,000 to 35,000 points in the more medium term view on the market. But right now, it's still holding up and still strong. If the US market pulled back and fell below that low, as I mentioned, around 25,000 points, then of course we'd be looking to see what happens and see whether it can find support around 23,000 points. But of course the Dow's not the only market that we watch. When we're managing client funds, we're looking at the Australian market. However, we're watching all markets around the world to see what's happening, because often there are correlations between the way the Australian market moves and the way overseas markets move. Now, it may not follow the Dow at times, and eventually the Dow may come back into sync with the Australian market. They get out of sync at times. In Dale's book, Accelerate Your Wealth, if you haven't got a copy of that yet, you must have a look at it, because it talks about how the Dow accelerates, or the US market accelerates, and it could lead for a 5-year period or over a term of that 5-year period, and then the Australian market will come back in and push higher and then lead over the next 5-year period. They seem to swap, which is quite interesting to know. So you can learn a lot, as I said, from history by looking at the charts. Now, the FTSE is obviously another important market, the UK market, which has been really plagued by Brexit and what's happening there. And Theresa May has been battling the political landscape, both dealing with the European Union and her own government, or both sides of the government, which we know from our own government can be a challenge to get things passed at times if other if there are factions in opposition. So, but looking at the FTSE, it's actually done quite well recently and recovered, not quite all of the way. So our market is actually recovered a bit further than what the FTSE's recovered in terms of where it was last year in 2008. And note the FTSE actually turned faster or earlier than our market. And we've been up, or the FTSE's been up now for a bit over 3 months. So it started to move up in January and then a nice move up through into April. But we could see some resistance coming through at around this 7,600 point mark. There's a little bit of short-term resistance potentially there. But as Dale has talked about some time ago, this level across here around 6,800 or 6,800 to 6,900 has been really quite strong for this market over history. And you can see there it made really significant peaks back in 99. Again here, we've got another peak in 2007. And of course, again, in 2015 when most markets came back and had significant corrections there. So it's good to watch and understand whether the correction that we're having on the market, whether we had to have it because it's a global correction, or whether it's just local or mostly localised to our own market. And we know that our market actually pulled back quite strongly in 16. And it's also interesting to see which markets recover. Do they turn at the same time? Our market also made a low around February 16 and turned and moved back up again. So that's where you can get some really good indications from other markets as to what our market may do, particularly if they're all moving together. So the DAX, the German market we've got there. In Europe, we're looking at this big bull run that we've had, which similar to the US market has taken out those prior peaks. So this March 2000 high, a nice move there, July 2007 when the GFC hit. Notice the shape of that, comparing that back to the Dow. I'll go back to the monthly chart. And you can see there, if I set it up for you right, we had these two highs here in 2000 and then the one in the GFC which went slightly higher. But still, a lot of resistance there for these markets around that time. And eventually the DAX went on and traded higher. Now, for those of you who are watching the forum who have done our advanced course, there's some really interesting patterns on the chart there that can give you an indication as to how far this may run. Now, at the moment, it's looking quite strong for the month of April. Potentially a little bit of resistance around where it's trading. So May is something to watch for this market. But looking at it, it's still, you have to just make a judgment on what it's telling us now, and it looks bullish. But we would continue to watch this closely. And looking at the weekly chart, you can see there that it's getting a bit thin on the ground. When you start to see that as markets rise and the moves on the bar are not as strong, they start to slow down. So you might get a few weeks where the range of the bar slows down, and that can always be an indication that the market is actually slowing down as well. So we've got a lot of resistance around this 13,000 point mark for the DAX. So it'll be interesting to see what happens when it trades around that level. So I hope you enjoy the rest of the evening. Happy trading. Bye for now.
Well, wasn't that great? I'm sure you'll agree that Janine's really good at what she does in analysing those charts. So, but with those world market, it is really, really interesting what's happening on the world markets, and especially the Dow right now, because the world takes its lead quite often from the Dow. But as I said the other week, is we're talking about two different markets, with Australia and the US market. While we get out of sync every now and again, and that's when I was talking about bouncing two balls, we bounce together and then we get out of sync and then we get back into sync again. But it is quite interesting what's happening with our market, just about to break through an all-time high like we haven't yet broken through our previous all-time high, where the Dow's been in the all-time high territory for years, for the last few years. So we're about 6% off ours. We've had a couple of days down at the moment, which is not bad. It's only about 1% anyway, but it is looking really, really, really good. I'll just have a quick look at some of the chat to say hello to a few of you. I've just got to put my glasses on, guys. I'm getting a little bit old. I've got here What do we got here? John says, good evening, everybody. Looking forward to another good information session. Thanks, John. An hour well spent, and my son is starting watching. That's awesome, John. I'm really pleased it's something you can do with your son and watching the show. We do have a father and daughter. The daughter's doing our course, and the father talks with his daughter. He said, now I've got a great relationship with my daughter because she's now into the stock market as well as myself. Kayung's got good evening, Dale, and Janine. You can't spell my name right, Deal. It's D-A-L-E. And can you have a look at APX and PDL? Yeah, we'll do that in a minute. Barry says, g'day. Steve says, hi, like the intro. Thanks, Steve. Todd says, hi team, had a week off in Perth. Hope you had good weather over there. And but back tonight for my favourite show. Thank you, that's really nice. Requested a course book yesterday, so I'm assuming you mean our course handbook. Love to have you on board and teach you to be a kick-ass trader, as I like to say that. Haven't bought lately, just looking for opportunity. Lend-Lease, we'll have a look at that as well. Ian saying, great to see you again. Thanks, my favourite YouTube channel. Thank you very much. There's a whole lot more, so we'll get to a few of those stocks in a minute. But earlier on in the show, I said that I was going to talk to you about how to avoid the crash. So I made that big claim that we can share with you just how you'll never have to worry about a stock market crash ever. And I do mean ever. Like, if you're worrying about the stock market pulling back, if you're worried about a stock falling 5%, if you're worrying about all of those sorts of things, then it shows that there's a lack of knowledge or lack of rules around your trading and your investing. Now, I know I can show you this or how to avoid crashes, completely avoid crashes, but I also know there's likely to be a few skeptics out there watching and going, yeah, go on, Dale, just show me how you're going to do this. I mean, after all, you don't know what you don't know, and that's one of those things that I see quite often, actually. Having mentored, and I've taught traders and mentored traders for well over 2 decades now, and I've thousands and thousands upon thousands of people that I've actually presented at major expos to, all sorts of conferences around the world. I've been invited to speak in China, New Zealand, Malaysia, and other places around the world. And I find that people make investing decisions from a point of view of ignorance rather than a position of actually knowing. So it's more of a guessing, that's sort of an ignorance, because they don't know what they don't know. Now, sometimes I see people make decisions from a delusional state of mind. And yeah, I did say delusional. The Bitcoin frenzy pretty much saw many people like that. I had retirees ringing up saying, I'm on these chat forums and there's these Bitcoin experts telling me to do this, so that's what I'm doing, and I put all my money in that. And these were pensioners. These were people that couldn't afford to speculate, and they were making their decisions on markets and what they were buying and selling based on flawed information. So they were quite delusional, and it's really, really common. And generally it's men 25 and under, or probably almost little get to 30 and under, but probably more 25 and under, and people that are retiring that don't have enough money, haven't planned, that get into these things, these speculative schemes. They get sold all these what ASIC likes to call scams, those sorts of things. So because they do get delusional because they haven't really done their research. So making decisions from anything but an educated point of view means you are taking much greater risk than you really have to. Now, for example, just before I went on holidays, I recall a gentleman, I was chatting to him on the phone, and he was going to stay out of the market because everyone had been talking about another crash. Now, I said to him, what do you mean everyone's been talking about a crash? They said, in the media, everybody's talking about crashes, so I'm not going to invest or trade in the market. I'm staying out for a while. And I said, geez, you're going to lose a lot of money then. In essence, he was letting others decide for him when to invest and when not to, and this cost him in lost profit. Because our market is bullish. There's no two ways about it. We are bullish. So therefore, if you're not in the market now, you're going to not get that profit, basically, if he's staying out of the market. You're also losing opportunity to be in good stocks going up, and that's another one. That's the multiple different costs. It's not just losing on a share, it's lost opportunity. There's also capital losses if you do suffer any losses from what trading you're actually doing. And what's more alarming is that this sort of statement or thinking is not uncommon for me to hear. It's pretty much every week I hear this sort of stuff, and I get people on the phone telling me how to invest or trade, and when I start asking them questions, their level of knowledge on a scale of 1 to 10, if I'm a 10 and Janine and I are a 10 as far as being experienced, confident traders, then most of these people are 1 or 2. And I had a gentleman on the phone only Friday, I think I was chatting to this gentleman. I said, you're a 2 out of 10, not a 10 out of 10. But he said straight away said to me, I'm a trader. So he doesn't know what he doesn't know. Now, what I want to do right now is share with you a spreadsheet, or the spreadsheet that I constructed when I was actually researching for my current book, Accelerate Your Wealth. So I'll get the guys to bring up the spreadsheet right now so we can have a bit of a look at that spreadsheet. Now I've got that, I'll bring it up on the screen. So you've got that on your screen now. Now this is just the snapshot of the 10-year performance. So you can see here, I started the portfolio on the 1st of January 2007. And we started it with $100,000. Now I'm only trading the top 20 stocks on the Australian market. That's all I'm trading here. So I've limited myself to only 20 stocks. When I did the US book, I did the same thing for my US version of this book. So some of you may have bought my book on Amazon or iTunes, and it's got a green writing on it on the cover. That means it's the US version, and that was the 30 stocks in the Dow. So I did exactly the same thing. I even got better returns on the Dow because the Dow's been more bullish since the GFC than the Australian market. But we started with $100,000. We ended up after 10 years with $325,000, including dividends. Now you can see here the performance by year is in this next column, and then the actual performance of the overall portfolio. So the performance of the portfolio, we made 225.82%, or an average return or an average performance per year, 22.58%. Now, here's the thing. 2007 to 2009 was the worst time in living history for me. I mean, I wasn't around in 1929, and I pretty much guess most of you weren't around in 1929 either. So we didn't experience that 29 crash where the market fell from 1929 to 1932. And so that was the worst time we've ever had. Now, we did have a pullback on the Australian market into 1974, where it moved from about 71 into 74, and it fell about 62%. But it wasn't considered a crash. So I'm just looking at what we call a crash, being the 2007, where it fell very, very heavily. The market halved in price, both in Australia and in the US. And people are worried about crashes. Now, I embrace crashes because I will never get caught in one. You will never get caught in one if you have rules. Now, I've never, ever, ever had anybody ever ring me complaining about a share going up. They always worry about shares going down. So interesting thing is, and you'll hear Janine and I talk about it all the time, about stop losses. Now, we talk about stop losses for a really, really good reason, is protection of capital first and foremost. Now, I'll go back to the spreadsheet in a minute, but with that spreadsheet, you can see here, looking at that, our first year into December 2007. Remember, it was the last end of the bull market. The peak was around about the 1st of October or the last day of September. I can't remember exactly that date. But we made 11.4% this year. Now, here's the next year to December 2008. That was the big fall. That was most of the fall there. We lost 2.21% because we had exit rules, which are trailing stop losses, etc. So we were getting out of the stocks, and our portfolio as a whole went down by 2.21%. The next year was end of December 2009. Remember, our market bottomed in March 2009. And we made 45%. How's that? Straight after the worst period. Now, in this period of time, I can guarantee every single person watching this video, if they weren't a student of ours at the time or a graduate of ours, would have not been interested in the market in the slightest. Most of you would have been staying out, worrying, because the worst news on our market was happening around there. There was a lot of doom and gloom, etc., around that period of time. And look, huge gain. In fact, the biggest gain was that year out of all of the last 10 years. Then the market went sideways a bit, and we've had -1, -2, and then all of a sudden we get 24, 26 between 2012 and 2013. And then over the last few years, they're 10, 7 and 13% to round it out to get us 22.58%. So just that one spreadsheet shows you should never be worried about it crashes, because this part here was the worst time in my living history, and yet we breezed through it. So yes, some stocks will fall out of bed on you, and they'll fall 10, 20, 30% on you out of bed all of a sudden, and you may not be ready for that, and that's just one of those things, and I call it, that's just trading. So that's it for the spreadsheet, and we can go back and we can talk about a couple of other things. Now, during that period of time, as I said, we were protecting our capital. Now, Janine and I were trading for our clients during that period, and obviously I think we had like 360 different accounts managing I can't remember how much it was, but it was well over $50 million in clients' funds. And the biggest loss we actually suffered for our clients during that period, the average loss was somewhere between 6 and 12% on their portfolio. So not just specific stocks, on their portfolio. The reason why was we're protecting the downside. Now the industry always talks about diversification, widen out your portfolio, have large portfolios, have 10, 20, 30 stocks, buy and hold on, they'll all come back. Which to me is, why worry about that? You should always worry about, the thing to me is it's what you do not lose that determines what you make. So always worry about the downside and have rules around the downside. Forget about what the upside's going to do, because it will happen anyway. So if you've got good stocks, the upside will happen and you don't need to worry too much. All you need to do is concentrate on exiting, and exiting at the right time and the right place. And it's interesting, the most amount of questions I get from people is they say to me, hey Dale, I know how to buy, but I have no idea how to sell and when to sell at the right time. Yet that's the most important thing. So using stop losses, number one. If you have stop losses on all your stocks, you won't lose. You will never get caught in a crash. If you have trailing stop losses, you will never get caught in a crash. You need to have that. Now, to give you some idea on some of the statistics we did, we had a CFA, or Certified Financial Analyst, go through, I think it was like about 350 or 360 trades that Janine and I did. And he came up with the statistics on us on our win-loss ratio, profit-loss ratios. We already knew them, we just wanted somebody to validate them. But basically the results was we use a 15% stop loss on our stocks, our initial purchase price. We put 15% of that. If the stock closes below that on any day, we exit. Simple. It's pretty simple. Stop loss in my book. Stuff is in my book, as I said, that chart or that spreadsheet was in my book. Now he worked out that our average loss was 9%. Simple. And whilst we were using a 15% stop loss, our average exit or average loss was 9%, and we were exiting off the tops of the runs, or the bull runs. We were averaging somewhere between 6 and 9% slippage off the top. So he was just amazed. This person was really highly skilled in fundamental analysis and understanding all that modern portfolio theory and all the different things the fund managers do, and he couldn't believe. And we looked at him and talking about, weighting portfolios, rebalancing portfolios the way the industry does. And what he worked out is all the way he looked at it in terms of industry, how they do it, compared to what Janine and I were doing it, is we were kicking ass. Pretty simple. And we were kicking the industry because we were protecting our downside, and we weren't just following the herd. And that's what a lot of people tend to do, is they follow the herd. In terms of what everybody else is doing, like Bitcoin. I was saying everybody was getting into that, or they're all getting into A2 Milk, or all getting into Afterpay. And the blind lead the blind, pretty much. And somebody said to me the other week, he said, Dale, don't never take advice from somebody that's broker than you. And that's quite interesting. But my mentors always say to me, Dale, if you want to learn how to make $1 million, find a millionaire. And I mentioned that the other week. And so that's really where you should be getting your advice from. But to me, you won't get caught in a crash if you do look at your stocks. Look at it like a portfolio, not as individual stocks. Sometimes a stock will just fall out of bed on you and you just exit it. That's just what's going to happen. But learn how to set stop losses, and every time you own a share or you buy into a share, make sure you have a predefined stop loss or exit strategy on that. If you don't have one, buy the book. It's $30. Just get into it, buy it. We'll send it out to you, and it'll change the way you invest, and you'll never lose money ever. And that one other thing that CFA said to me before I move on is, he said, Dale, based on how you trade and the rules that you use and what you teach your students, it is impossible for people not to make money. And I'll say that again, if you follow the rules we teach in our courses, it is impossible for you to lose money. So, and that the proviso is you follow the rules, and we can teach you to be successful. You just have to follow the rules. It's pretty simple from that point of view. So, but that spreadsheet really does highlight what's possible even when the market's had its worst period. So, but I think it's time we look at some stocks from everybody and get off that. And one was sent in earlier from before tonight's show by William Jago. So thanks, William. I know you've posted a few questions over the week, so thank you very much for your support. And he says, thanks for that, Dale and Janine. Hope you had a nice break. Dale, wondering what your thoughts are on IPH. I believe it may begin a breakaway as it did from August to December 2015. Cheers, much obliged. So let's have a look. I'll just bring up the chart now of IPH. I'll just bring it up there. So that's on your screen. So you can see on the left a monthly chart, on the right is a weekly chart of this stock. Now, interestingly, it's been in an uptrend, but it's a little bit of indecision at this point in time here in the uptrend, so it'll be determined whether it will continue on up. Here's its previous all-time high at that point where my pointer is, and you can see again, it's very much indecisive. It opened up at 880 and closed at 887. But with a high of 943. So you can see if I just scroll that out, you'll see the opens and closes are in the sort of in below halfway and really close together. That shows you there's indecisions on this stock. Right now, he's talking about a breakaway pattern. Is it going to be breaking away like it did in August to December 2015? Well, there's no breakout pattern through here. There's a bit of a pattern in here. But let's go back to 2015. Where is it? 16, there's 2015. 16, I can't even, there we go, 15. So we're talking about August to December. So that's probably this area here. So we've got there that little pattern, March 15 through to July 2015. That pattern there doesn't look like this at all. So I'm not sure exactly what you're talking about. Going over to the weekly chart, William, looking at this, it's looking bullish. It is a nice looking bullish. I wouldn't suggest it's doing exactly the same thing as it did back in 2015. That's a bit indecisive, but this is only a couple of days this week. Remember, we've got Monday and Tuesday's data in here, so it's coming back. It's not uncommon for a stock to break above that little bit of a sideways move, because there's a vacuum that happens above some support and resistance levels, and this is really what catches a lot of traders out, is they sit above levels like round numbers like $7, $8, $9 with their buys. And what they're doing is there's a lot of buying at these levels, these support or resistance levels, or there's a lot of selling there. And what the institutions do is push price through that. So brokers will push price through that to suck up this vacuum of buyers and sellers. And all of a sudden it moves really quickly in one direction. And then when you exhaust that vacuum, it sucks it right back into where it was before. Classic symbol, and this is one of those ones. You generally find they come right back into these sorts of levels. So I just sit back and wait for a little bit, William, before I really get into all that. Now, we've got another email before I get on to a couple of the other stocks, and I'll get on to the chat forum. The other email we received prior to the show was from Jim Duncan, who said, "Dear Dale and Janine, just writing to say how much I'm enjoying the weekly broadcast. A question about technical analysis that has always puzzled me, if I may, are the moves, trends, patterns, etc., passive or active or both?" Cheers, Jim Duncan. Are the moves, basically you would have heard Janine and I talk about the market moves in price, pattern and time. There's three keys to the market, or there's a triad: price, pattern, time. I know that when we talk about the 90% of traders don't make money, meaning 80% lose money, 10% break even, and only 10% like Janine and I make money consistently on the marketplace. And the reason why is most people only use price alone, and there's a lot of indicators which are all price-based type things like moving averages, Bollinger Bands, stochastics, RSIs, MACDs, you name it. They're all momentum volatility type indicators based on price. And I often see people say to me, "Oh, this is saying this, what do you think?" It's saying bullish, and I go, but it's saying bearish as well in these other areas. So you're looking at times, a lot of these indicators are wrong, or they give you missing signals. And I remember studying these 20 years ago, and in the books that I was studying them and in the courses I was studying them, they were saying these are prone to inconsistency and failure. And I went, well, why are you teaching me these things? And that's why I really do classic technical analysis, stuff that's been around for 100 years, pre-computer. And you'll see Janine and I will look at stocks with our eyes, and we'll determine price, pattern and time with our eyes, because you're predisposed as a human being to be able to do that. So are the trends, patterns and move passive or active? Now, I'm not 100% sure what you're talking about there. You may be talking about things like efficient market hypothesis or random walk theory or chaos theory in the marketplaces. But to me, the price of the market and the trend of the market is exactly what the mood of the market actually is, based on all the knowledge that's known at any one time. And so it really is, the markets, I believe, are efficient, because people panic, people get greedy all of the time, and they are quite efficient. But the thing is, I don't really need to understand all the fundamental or economic factors around it, like what's happening with interest rates or what's happening with the US or other markets. So seriously, Janine and I can actually, and I've often said this to people and I've challenged them, that you can get a spreadsheet of data with the date, open, high, low, close and volume of any market, any commodity, any stock, any currency, anywhere in the world. Not tell us what it is, where it is. We just need the open, the date, the open, high, low, close and volume. Slide that under the door, give us some charting paper and some pens, and we'll trade it for you. We'll draw it and then trade it for you successfully, because we don't need to know a lot of things. The charts will tell us everything that we actually need. So as long as you've got good buy and sell rules and good management rules, money management rules, risk rules, you'll trade very, very, very well. So, but happy if you, Jim, if you want to be a little bit more, give me more explanation on your question, I'm happy to do that through info at Wealth Within. I'm quite happy to give you a bit more of an explanation if I haven't really sort of guessed what you're doing. So, but let's go and have a look at the chat, and we'll bring up some charts in a second. I'll just put my glasses on so I can see what I'm doing. We do have a few more people on the chat, which is great. So as I said, get onto Facebook and Twitter and YouTube and send carrier pigeons, tell everybody to get online, because we've got to beat Janine, remember guys, so need your support there. So had a couple more comments here. Ian's going, the Excel spreadsheet results from your book is what gave me hope that I can grow my super as well. Thanks, Ian. That's really why I've started the diploma. Thank you. Guaranteed it will look after you. If you follow those rules in the book, you will make money, and you know, by doing the course, your trading is going to go through the roof. I really am super confident of that. Daniel K says, hi Dale, as an 18-year-old, I want to begin investing in the stock market. Any stocks you reckon I should keep my eye on, have good potential in the future? Daniel, if you're new, top 20 stocks, stick on those, look at those. Things like CSL, Cochlear, Wesfarmers, Woolworths. Don't go speculation. You're young at the moment, but you're also inexperienced. So just buy my book and follow the rules in that from there. Peter's talking about AGL. Yeah, we'll have a look at that. Daniel, I'd suggest you're investing in your education first. Barry, oh, well done, Barry. That's nice. Thank you for saying that. You have your whole life ahead of you, then put what you've learnt into practice. Barry Ward says, if I've got one regret, it's not undergoing this education earlier in my life. You know, I hear that from so many people, guys. I don't think I've met one of our students that hasn't said, I wish I'd done this earlier, and it really is something. I quite often get frustrated why people hold themselves back, and it's just that fear of the unknown, guys. And I do understand it, but again, you know, if you want to be a successful trader, I can teach you to do that. Janine can teach you to do that. We've done it thousands of times with people, and we know that we can get you to where you'd like to go. You just need to give us a shot at it. So please do that. Aidan Chandler said, hi guys, loving these incredibly informative live chats. I've learnt so much already. Your books, thank you so much. Looking forward to doing your course once I finish my current studies. Thanks, mate. Phil Cawthorne, how I bought some Costa shares. Costa's good. I like Costa shares. Go from Geelong. I'm a Geelong boy, so Costa is a big family in Geelong. Recently on a Gann counter trend theory. Yep, fantastic. We might have a look at that. And we've got, I can't even say your name, the person that just came on then, E-Corso. Hi Dad, and if you have time, look at ALI and AGH. So let's look at a few stocks at this point in time, and then I'll cover a couple of questions. So I've got APX. If we come up here, now somebody up the top asked me about APX. It was Kayung. I hope I'm saying that right, Kayung. Good evening, Dale. As I said, he taught me deal. Can you have a look at APX and PDL? So APX there, look at that vertical move on the left-hand side, monthly chart, remember. Right-hand side is weekly chart. Look at that massive, massive gap. It hasn't filled that yet, so that worries me a little bit. And there's a lot of sort of indecisions through here. You can see here, indecisive bar there. Moved down very, very strongly, big gap, and I'll just push that out there. You can see the big gap down, moved on, another gap down, and look at this, open and closing in the bottom, moving. Open high, close low, open, pushed up, came back. Really, it's not pushing on a bit. And you'll see that something will exhaust itself. It'll push up really fast. And what generally goes up fast will come down fast. Now, let's have a quick look at this. You don't actually say whether you own it or you're looking at buying this stock. It really does help me if you say I own it or I don't own it, why you're looking at it if you don't own it, why you own it or you're still holding it. But this is... if it breaks through this high here at 26, I think it's going to keep going. But looking at this, if you look at, where's my trendline tool? One of the things I talk about is momentum all the time. And you can see what I do here. that didn't work very well, did it? It's gone off the rocks. Put my trend line on. You start seeing the momentum changing. You see the angle of the trend changing. Normally, what I talk about I know Janine, this is jumping around a bit, isn't it, guys, tonight? Well, gee, when Janine's here, I get technology problems. When you see these angles increasing, now I know I showed you, or Janine showed you one of my videos that I do for the trading mentor students. I do that every 2 weeks. It's called Ask the Expert, and they just give me a stock and I pull it apart and do that. She showed you a small snippet of one. And I talk about the angles. When these angles get steeper, now once you've got that third one, fourth one will pull it up. And if you get a fourth one, fifth one will definitely pull it up. But when you've got the third one, you're starting to look at the peaks happening. So that's what I would say. There's probably not too much upside there on that one. Let's have a quick look at PDL, so because we've got a lot of stocks to get through tonight. And Janine went way over time in her market report. I told her 6 minutes, she did 8. That's just what Janine does. She loves giving you extras, and I believe she gave you a hell of a lot extra last week. But Pendle Group, I've actually never heard of these guys, so that's really strange. I don't know all the stocks on the marketplace, but that's interesting. Look at that. Look at that, like a double top there, 1320 and 1326. So the bit of a double top there and a move down. So it looks a little bit bearish. Now, to me, if this thing can't get back up above, let's just put that there and whack that over there. If this thing can't get back up above that sort of $10.30 level, can I put that one there? Yeah, around about that $10.30 level. If it can't get back up that and it starts to fall away, if this thing falls away, if we get a red bar next week or next month, and let's look at the weekly chart shortly, I would suggest this is going through that level there. So this is not a stock I would actually be in, Kayong. So let's move along. Hopefully, let's look at Lend-Lease. Oh yeah, that was, who was that was talking about that one? Todd? Was that Todd? Todd. Blah, blah, blah. Let's look, haven't looked at, maybe Len, yes, Todd Martin, he said, requested a course handbook yesterday, haven't bought lately, just looking for an opportunity, hoping Lend-Lease. Look at that, looks nice, doesn't it? Looking a lot nicer than what it was. Big fall, look at this big fall from August right down into January 2019. And interestingly, it's like a lot of people, we always say to people, go back to the monthly chart to see the bigger picture, because it's not until you see the bigger picture do you really see where a stock is. Now look at that, it keeps changing, doesn't it? Every time I go back, more and more data on the screen. And if we look here, there's lots of support around that sort of level, that 1080, 1090 sort of level from previous highs and lows. So always go back to the monthly chart. And I know there's a question from Ian there about data in 20 years, and I will handle that in a second, Ian, because I think that's a really awesome question. But right now, looking at this, if this breaks above that high of 1422, and I'll just show you that a little bit more, if it breaks above that high, then I would suggest this thing's moving up in a nice medium to longer term uptrend. And that 18-year-old young guy, this is a stock you would absolutely look at. So let's just quickly look at the weekly chart. Lend-Lease is one of these great stocks. It's well known around the world. Now look at this beautiful move up, 1, 2, 3, 4, 5, 6, 7 weeks up, 1, 2, 3, 4, 5 weeks down. 1, 2, 3, 4, 5 weeks up. If we get 6 or 7 weeks up and break through that high of that 1422, this is a stock that I would actually be in terms of that. It's looking quite nice at this point in time. See, volume's picked up a little bit across the bottom there from where it was over here. So there's more volume in it. There's more interest in stock. So look, keep going with all of that. Let's now handle Ian's. We'll go back to, I'll look at Ian's thing, and then we'll look at a few more stocks in a minute. So hopefully it's hard looking at the iPad and reading everything, guys, and keeping on track. You guys are really good at asking lots of questions here. Where's Antoine? Wow, geez, there's so many questions. Where are we? Ian, Daniel, blah, blah, blah. No, I've gone past Ian's question. Where is it, Ian? I think he said something like 20 years, data for 20 years. I can't even find out where he is. He's asking, saying with having data for more than 20 years. Here it is. Nope, that's not it. Saying, is it really relevant having data going back 20 years? Absolutely, definitely, positively, it's worth having your data back 20 years. Janine and I will always go back as far as we possibly can. Yeah, stocks will change personality slightly, etc. But Janine and I got data back on the All Ords Index back to 1875 and the Dow back to 1900, and we study that simply because markets will continually repeat previous cycles, and that's what they do. And the world goes into different cycles all the time. Human nature doesn't change. It doesn't matter whether you were born in China, whether you're born in Korea, whether you're born in the UK, or whether you're born in America or Australia. We all run on fear and greed. That's how we do it as individuals. So if we think something, we're not fearful, then we're going to do something. If we're fearful, we're not going to do something. And we create the patterns and cycles in the marketplace. And so they do repeat. So it's looking at that longer term history on stocks and market that really helps you understand where you're going to go, how a stock is likely to unfold in the future. The mistake a lot of people make is they think it's 100%. Just because a stock ran $10 last time, they think it's going to do that the same thing in the next time it runs, or it's run 100% the last time, so it's going to do 100% this time. It may not, it might do a percentage of it, but it gives you indications of the price, the pattern, the time that it's going to take. For example, looking at things like BHP and Rio, they roughly have lows every 5 years. I know that. They have lows roughly every 5 years. And so we can plan that into our schedule about whether we're going medium, short term or long term. We know where they are in their timing move to know whether at the bottom or whether at the top or halfway up the run. And we have roadmaps, and this is where using longer term data like 20 years of data really helps you understand and draw out that roadmap for the next bull run or the next bearish run, to know when it's going to find support or resistance, or how far it's going to run and how strong that run's going to be. So it is a really, really important question to consider, Ian, and that's why you'll always see Janine and I on monthly charts. And one of the biggest sins people make all of the time is looking at daily charts, and I can guarantee you guys watching that when you bring up your broker platforms and where you're placing your trades, every single chart you bring up says straight away goes daily. Why? That's because they want you to trade, because they make money when you're trading. And when you look at a daily chart, you're seeing useless information pretty much. And I will say it once, and I'll say it very, very strongly. The daily chart is next to useless to you in trading the market. Actually, I'll say it twice. The daily chart is useless to you when trading the markets. Unless you're trading intraday, forget about daily charts. You should always look at the longer term time frame. That's the big picture, because like bullies in the playground, and this is really what it is, you get the biggest bully in the playground, the biggest person in the playground, they're the bully, and they're bullying ones that are smaller than them. Same happens with the market. The bigger trends dominate the smaller trends, and that's what they knock them around. So why trade long why trade long in market or up in the market when the longer term trend is down? The longer term trend says that the short term move is not going to last very long, and it's not going to be a very solid trend for you, and you will get caught in it. Too many people trade opposite to the direction of the market, and that's really, really common because they look at daily charts. So, but great question, Anne. Let's look at a couple more stocks now. I've go back to the charts, and we've got CSR. Now I've got to figure out who this one is. As I said, we do have a hell of a lot of questions here, and please excuse me if I don't have it, because I don't have Janine reading this forward. Peter Bush, I'd like to hear your thoughts on CSR. Really good stock, CSR, and you can see again a little bit like Lend-Lease, it's come off this major low. Here's its all-time high back in May 2008. I think it's its all-time high. Let me bring that up. I better look at the whole chart, because I've just been telling you to look at the whole history. It's not its all-time high. There's its all-time high. Look at that. This is interesting, isn't it? That's its all-time low, and this is one of those rare stocks. You don't get too many stocks where their all-time low is on the right-hand side of its all-time high. Now, if we go and put on where's my tool? Which tool that I want? No, not that one. Where have I got? That's what I want. I want this little tool. Whack that on there. Look at that. That's fallen 75% of its all-time high. Let's whack on 90%. Let's look at that and drag that up. It's fallen nearly 90% of its all-time high price. When you see a stock do that, Maya did that recently, and I did a recording for our students on Maya only last week. If you go and look at Maya, you'll see it fell 90% of its all-time high and going. And I've been telling our students about Maya for the last 4 months to keep that on their watch list and look at it. And Maya has done really, really well for anybody that actually got into it. Also, we were telling people about A2 milk a few months ago as well. So, and that's gone ballistic as well. So it pays to be a student of ours, because we give you some of these really cool tips. But looking at this point in time, we're seeing a nice move up, 1, 2, 3, 4 months up from that low. It's had a higher low than that. This is looking quite nice to me. Now let's go to the weekly chart. So on the weekly chart, we're seeing in a nice little uptrend there. We've got an uptrend line underneath that. If I just put a bit of a trend under. Oh, and this is not working, isn't it? Geez, another technical problem, but it's looking quite nice. So I think it's a really good pick. I would stay with that. I think there's a lot more. I think you probably got another $1 or $2 in your upside there. Whoever that was again, I can't remember what your name is. There's Andrew. Yeah, not Andrew. Andrew's talking about Santos. So that was Peter Bush. So thanks for that. Now, the next stock we've got is MLD. I'm not going to have a time to go through all this, guys. You've been fantastic. Hope you've been telling, as I said, all your friends, get online, Facebook, YouTube, Twitter, you name it. Tell everybody about us. Get on chat forums and let people know who we are, because we really do want to support you and keep doing these shows. So please support us. So MACA, MLD is the stock ticker code, and I can't remember who's talked about that. I won't even bother. I'll just pick up stock code. So please excuse me for not mentioning your name. Don't like this one as much. It's a bit more illiquid. Look at that. So volumes drop right across through here. It's quite volatile. It's probably more of a trader's stock than it's not a buy and hold one. You can see sort of since around that 2010, it's not done really well. Although if it does get above that level there, which is $1.06, it might be on a new uptrend. But looking at its all-time low right back in 2015, 3 years later, it's had that low. So yeah, it might be not too bad. So looking, to me, look, it's worth having a look at. This is a monthly chart, remember, and that, so it's looking right, but it is a little bit illiquid. It has been going sideways a bit, so I would, as I said, I'd definitely wait for it to go through that high there of $1.06 before I would get too excited. If it can't get through that, it might turn away. Now, I know there was that Santos comment, somebody, I did say, whereas Andrew, he said, "Hi Dale, thanks for your analysis on Santos last week." I don't remember doing that, mate, so, but thanks, I obviously didn't quite crack your target entry level area, so great advice. Yeah, that's why we put entry prices on things and have our rules around it. And you quite often might see a stock move up to an entry rule, move up to it, but not actually trigger our rule. And that's why we have black and white rules when we're trading. And he's got a little cycling thing, so thanks for, you must be a cyclist or that time. But we also have rules around exits as well. So we have buy and sell rules for a reason. We don't just guess. Just because a stock's going up doesn't mean we get into it. We need to trigger rules and solid rules that we've worked out prior to trading. So we backtest rules, as Janine, I believe Janine took you through backtesting. That's so critical. Because why would you put your money on the line if you don't know with high probability that you're going to make money? And that's really what I want to share with you guys, is always trade on confirmation, not speculation. And the 90% of traders that lose that I talk about are those who are delusional, like I mentioned. You know, they have this perception that they actually know what they're doing, but they don't have solid rules. And if you can't articulate your rules to me in a clear and concise manner so that I understand them, or for example, somebody else that doesn't know anything about trading, if you can't put your rules into a little sentence that somebody who has no idea about trading understands what you're saying, they may not understand the technique, like let's say a trend line, they may not understand that, but they understand what triggers the rule. And I find most paid traders, and I'm saying at least 90+% of people that ring up asking about our courses and they tell me they're traders, I go, "What are your rules?" All I get is and that's what I get. And seriously, that's what I get most of the time. And they might go, "Oh, the 52-week high," or "the volume's increasing," or, you know, "I think it was cheap." They're not rules, they're just ifs. And to me, that's why most people are inconsistent with their trading. Let's go and have a look at another stock. We'll have a quick look at STOCM. We're talking about that. And obviously I was chatting about breaking through this level here at $7.48. And you can see here how here it hit $7.49 and came right back down there. And it's actually filled that gap that it made. So right now it'd be interesting to see what Santos does. I'd really seriously wait for it to get through that 7.48, but it doesn't look too bad on the monthly chart. So keep that on your watch list. Who was it? Todd? Not Todd. I can't remember who you are. Andrew, sorry. Keep it on your watch list because it just may be delayed getting into this sort of stock. Let's look at a couple more stocks. I've got about 10 minutes odd left. I've got Megan, says, "Hi Dale, I've only recently started watching your show and I'm quite enjoying it." Thanks, Megan. It's great to see a lady. We need more ladies because it's the statistics keep saying, I think it's 80 or 90% of the people watching this show are men. Let's get more ladies on the show because ladies make better traders, guys. I'm sorry, they really do, because they don't have egos like us. We've got big egos, and if you're not sure how big yours is, just ask your wife. Mine smacks me on the head every now and again saying, "Dale, don't say those sorts of things." But do, please, if Megan tell all your friends and get them on the show and get them asking questions. So thank you for enjoying our show and coming on. I've also have your book, which I'm finding very informative. Thanks very much. What are your thoughts on Wes if you have time? Peter Jury saying, I'll bring up Wes. Peter Jury saying, welcome, hi from Bali. I know I was looking at Bali only yesterday thinking, I should just take a holiday to Bali because I actually love going to Bali to some of those places. So thank you very much. We'll look at Wes. What have we got here? Ian saying, great video. Janine. Daniel saying, hey Dale, keeping an eye on Coles. New sales results released, looks good for sales and growth stocks. Would like your thoughts. I did look at Coles the other week, so let's see if I can bring up Coles. Oop, I've got my thing on. Let's put my pointer on. Let me go Coles. Where's Coles Group? Then we'll bring up Coles and we'll go back to Wes. And Daniel, we've talked about that. Barry, we talked about that. Alexander, hey guys, loving these incredibly informative live chats. Thank you very much. Have learnt so much already. Your books, thank you so much. Looking forward to doing your course once I've finished my current studies. Thank you, Phil. Cawthorne, hi Dale, some of your Costa, that was it, Costa. Thanks, Phil, for reminding me. I know you did that on purpose, didn't you? So that's CGC, because as I said, I was looking at that only a week or two ago. It is looking really, really nice. Brian Coombs, hi Dale, first time watcher. Hey mate, great. Thank you very much for being on our show. Loved getting new people on the show. Hope you're enjoying it. Appreciate your dedication. Thank you very much. Any thoughts on VHT? We'll have a look at VHT as well. Let me bring that one up, VHT. Look at that. And what's another one? Telstra, Terry Halpin says, Telstra all seems to bit me. Do you think a long-term uptrend? I will look at Telstra for you. I think you need to practice your English though. Makes it a little bit easier for me. Again, guys, it really does help me if you own it or don't own it and tell me those sorts of things. And Ian saying, thanks for the explanation on the 20-year chart data. Greatly appreciated, Dale. So let's get on to the charts and we go to Wesfarmers first for our last 5 or 10 minutes. So you guys have been awesome. So again, thank you for really, really helping me out with tonight's show. And Janine will be back on with me next week. But look at this, really big sideways move on this stock. And it is really, really interesting when you see these sideways move. And here's that another example. Remember we talked about a breakout when I looked at that stock, whichever one it was, I can't remember I can't remember the gentleman's name actually. Remember that breaks out and then it comes back into the pattern. So if I use my little tool here, where is it? If I go sort of from that level down there to that level down there, you can see there's nearly 22% in where's my horizontal lines? I can't find it. Where's my horizontal lines? No, it's not telling me. Where is it? Okay, all right, I'm going to do a horizontal line. I think it's HZ. Oh, that's not it. Hate it when my tools get mucked around. I've got vertical lines here and trend lines. I'll just use a trend line and go sort of sideways. Oh, I can't do that either. Looking at this, you'll see a lot of this price movement, you'll see around 50% of that move. So that's 22%. Roughly 11% is roughly where my pointer is. You'll see a lot of the price will happen around that. And you'll see a lot of the lows and a lot of the highs and support and resistance around that halfway mark. And that's really what I was trying to share with you there. And I'll just use my crosshair. You can see around about there, you see a lot of peaks and troughs and support and resistance and opens and closes around those levels. So it's not unusual when something breaks right out like it did through here to come right back to around about halfway, and it works with all sorts of patterns. But you really do need to understand what you're doing. I know I had a gentleman ask me a question on, I'm not sure whether it was Facebook or YouTube, and he was asking me, he bought my book, but he was asking me this complex question that he thought was probably simple about why something fell 5%, I think it was, why something dropped, no, it was 15 or 20%. And he found certain things happen more regularly with him. But for me to answer that would mean to have required to teach him a whole lot of things for him to actually understand my answer properly. So sometimes questions you ask are real easy for Janine and I to answer, and other times the answer behind the answer is even more important. It has a level of understanding that you need, because sometimes people take stuff out of context that we say. and because we're trying to keep it simple, because remember, most of the people watching this are beginners and have been trading for less than 12 months and wanting to get into the market. So we're trying to still keep it higher level. There's a lot more things we want to do with this show, but right now we've got to keep it at this higher level. But right now I like Wesfarmers. It's looking really, really, really nice. So I'd suggest have this on your watch list. You'd probably be in it already. If you'd been watching it using the rules we teach, you would have been in it. You'd probably be up 10% already on that stock, at least, if not more. You probably got into it somewhere around about 32, so you're probably up about 12 or 15% on that stock at this point in time already. Let's look at Coles, and I can't remember who you were, so I won't go looking again. Coles again, we've had that split, but looking at the Coles, when that split, it split off, I think it was I can't remember, I won't say it anyway, but Coles is now out on its own. Right now it's looking like it's starting to move up, but we've seen 1, 2, 3, 4, 5, 6, 7 weeks up. And look, this current bar here, we've got opens and close at the same spot. If you just see that, it's a bit of indecisive. So interesting, if it closes, I wouldn't be entering right now. If you don't own it, I would not be entering right now, because what will happen is it'll come back and retrace somewhat. So I'd be looking at this move from down here down to 11.16 and looking up to that move at 12.70 and saying, well, that's around about $1.50, $1.60. So looking at that, if it falls round about to around $12, $11.90, $12 and stays above that level and starts to move up, then I would be looking to enter. But right now, most people, the amateurs buy at the top and the professionals buy at the bottom. The professionals would have already been in this, and the amateurs are buying in now. So wait for a move back down and see where it finds some support. But right now, it's not a lot of data on this, and this time it's not enough to convince me that it's bullish or strongly bullish. So let's get into the next one. Is Costa Group. As I said, Costa's is Frank Costa was the I don't know, matriarch of this, or patriarch. I'm not sure which one's the man and the woman now. But really nice looking stock. It had a beautiful run up from its low back in 2015 there around that $1.93. And it's just come right back down about halfway of what it runs. So if I go and put my little tool on here, let's put my little tool on it and let's see if this one works. Yeah, and you can see it's a bit more than that. It's come down around 61.8% of that, a little bit further than what I would hope, but it's starting to find some really nice support in here, and this is be a nice stock here, so good. And look at the volumes picked right up through here, so it is looking good. I like the stock. VHT, Volpara Health Technologies, I'm not sure who has picked this or whether you're in it or not. Again, one of those ones that's just broken out. Look at the angle of that, it's just really taken off a bit. If you're not in this stock, I wouldn't be trying to get into it right now. You're getting in at the wrong end of it. Again, the opens right down on the low, the close is right near below it. It'll be interesting to see where it finishes up this week, but I would suspect that it's probably going to come back down into this sort of 140, 150 area. And I'm really looking at this really quickly and lightly because we're now 1 minute over time, and I know you guys have got a lot more questions for me to answer, but is not a stock that I'll be entering. More illiquid through here. It's not a highly liquid stock. We're talking about 1.3 million shares trading at $1.20. That's not very liquid at all. It's not for the faint-hearted there. Telstra, this is interesting, this stock, and I actually do, and this is strange. Now you need to record this, or it is being recorded. I actually like Telstra, and that's something that's super, super rare for me to say. For 10 years I was saying this is a dog stock, but looking at this, it's come right off this major low down through here at that $2.60. I think it got down to a bit lower than that. And it's looking nice. It's broken through that high of 341. You can see it's 346. It's a higher. This is now in a medium to longer term uptrend. So I'm not sure what the question is. I can't remember what the question was. Let me have a quick look. No, I can't see where it is now. Yeah, it seems a bit, do you think it's on a long-term uptrend? Yeah, I think it's starting a long-term uptrend. It's paying a reasonable dividend. I think for a nice superannuation portfolio, self-managed super portfolio, long-term, medium-term buy and hold, really nice looking stock to put in. You've got your Wesfarmers, your CSRs, the land leases, or those sorts of things you could be adding to that. So it's looking really, really nice. So I'll just have another quick look at the chat before we get further into this, before I have to wrap up tonight. Craig Lyon says, yeah, I'm new here. Well, welcome to the show, Craig. Thank you for that. Thank you for coming on. Daniel K. reckon 5G networks could positively affect Telstra in the long run. Look, I don't really care. It's really what's driving the price of it. I don't really care. Probably if they're in 5G? Absolutely. They're going to have the biggest 5G network initially. Optus is in it. Vodafone has got some 5G, TPG has got a little bit as well, and they're trying to do that deal as well. But there's going to be enough competition out there. But Telstra right now, the chart's telling me it's long-term bullish, so I don't really matter what's going to drive it as long as the price goes up. That's really what I'm looking for. So, but great from all of that. But thanks, guys, for really helping me out tonight and doing this really, really well. I'll just get my teleprompter to work. I'll just turn it on again. There we go. It's turned off while I wasn't working. Oh, sorry, wasn't looking at that. But again, we've had lots of great comments on the chat tonight, so it's really awesome to see so many of you really keen to understand the market. And Janine and I sincerely, we love doing this show. We absolutely love doing the show, and we love helping you out and answering your questions. And I seriously would love to do this show for a couple of hours. But well, I wish I had more time to do that, but we really do need your help to help us. But as they say, from your questions point of view, if I haven't answered your question tonight, please, I'm sorry about that. I've just run out of time because it does really go quickly. But as they say, hey, there's always next week, so get back online again. But remember to subscribe to our channel. So whatever that button is down there, hit the subscribe button, hit the little bell so you know when we're doing things. And it really does help us. And make sure you comment about the show, etc. That also helps us with YouTube. The more YouTube pushes us up to the top of the searches, the more people watch the channel, the more we can do and help you. On another point, Janine and I are very happy to keep putting in this time and effort to do this show. As I said, we love doing it. We really enjoy helping you out and getting that great feedback and knowing that people we're stopping. Our major goal is to stop you losing money first and foremost. If we can help people, whether you do our course or not, it's irrelevant, and whether you buy my book is irrelevant. If we can stop you losing money or getting caught in crap, to be blunt, or things that you shouldn't be in, then we've done our job and we've helped out Australia and really help people not get caught. And I hate those phone calls when people ring up and they go, Dale, I bought this software for 15 or 20,000, or I did this weekend workshop for 20 grand, or I did this and I lost 30, 40, 50, 100. I hate those sorts of phone calls, not because I don't want to speak to the person, because I really do want to help them. It's because they've got burnt because they really haven't had the knowledge and everything. So if we can impart stuff to you, even on this free YouTube channel, that helps you avoid getting caught in those sorts of things, then we've done our job. But as you can appreciate, we've got a huge team of people working on this program behind the scenes that you don't even see, and they're doing a fantastic job each week to bring you the quality that we do. It's not easy to bring a show of high quality, and Janine and I, we love doing it, as I said, but we actually do want to make the show bigger and better. We want to put more segments in. I want to go out and interview traders, so I can bring you real traders, not these pretend gurus that say they tailor their traders on YouTube and you don't know what they are. I want to go to people's homes and actually into their homes and say, hey, what do you do, and show you how real people and real traders actually live and what they actually do. So we do need your support to help make this show grow, and that means we ask you to share the link for tonight's show to your college, family, friends. Put it on Instagram, Facebook, Twitter, you name it, put it on. Even use the carrier pigeons, type a little thing, go to this show. But all you do is you go to our YouTube channel tomorrow, grab the link off the top there, put it in an email to your friends, you put it on your Facebook and get more people. We do really need to get the viewers up to the hundreds and the thousands to really make it worthwhile for us because we've still got to pay staff and everybody else to help us work on this. The more you talk about this show, social media, chat forums, share it with your friends, the more people will join the show and the more we can do for you in making it bigger and better with lots more content, topics and other things. So it helps everyone, and really everybody will benefit. Now, just as importantly, make sure you put in your diary to get online next Tuesday at 7 p.m. as Janine and I, and yes, Janine will be back, so we'll both be on, so you get a double whammy next week, 2-for-1 deal. So we'd love to see you again, and we'd also like to get some feedback on tonight's show. So send me your email, info@wealthwithin.com.au, and just type Wealth Within in that subject line. Whack your question on, say, hey Dale, you're not only awesome, you're good looking too. But that really does bring us to the end of another show, and we really hope you've enjoyed it. I've really enjoyed bringing it to you and answering your questions and looking at your comments. So it really is a pleasure to do this for you every single week. So as always, we thank you for taking part and hope to see you next Tuesday at 7 p.m. But for now, goodbye, good luck and good trading.